Hey everyone, welcome back to the Money Level Show where we think, act, and prosper. Today we're going to jump into many different assets. A lot of assets have just been booming. We've seen all-time highs. We've seen meme stocks back on. We've seen the Dow Jones hit all-time high. I mean, it's just seems surreal. And so we're going to jump into that today, see what's going on, read a couple of articles, and looking forward to engaging with you all and seeing where opportunity lies. And so let me go ahead and kick the intro, and then we'll be right back to the show.
Think. Act. And prosper. You are now tuned into the Money Level Show.
All right. We're back. I hope that you all are doing well. I'm glad to be here with you. And if you are watching, be sure to drop a comment in the comment section. Love to connect with you and acknowledge you. So we're going to go ahead and jump into it because we've seen all-time highs. I mean, gold hit an all-time high measured in dollars. Silver has been creeping up. It has not hit an all-time high, but it is above $30 an ounce right now. We've seen the Dow Jones hit an all-time high, 40,000. We've seen the meme stocks back on. We've seen crypto starting to turn around and starting to pump, as well as we've seen the Chinese equities start to turn around as well. So we're going to look at all of that today, try to make sense of the market. I mean, just by reading a couple of articles, I know that the inflation print that recently came out was slightly cooler than expected, and that was bullish for the markets as well. But I just want to see what's going on here. So let's go ahead and make sense of this. All right, so let's go ahead and share screen. We're going to go ahead and look at some numbers first. All right, so here we are. First, we see here the DJI, the Dow Jones Industrial Average, has hit over $40,000, and this is a all-time high. Has never been this high before. So $40,000, as you can see. I mean, if you were buying a Dow back in the mid 90s, you could get it for $3,000. So you've made massive amounts of money if you are investing in a Dow. And so we can also look at other indices such as the S&P. Let's see what the S&P is doing. Let's go ahead and look at the SPY. The SPY is at 529. The SPY recently had a breakdown. It broke out of a channel here, and then it's already back up. So let's see if the SPY is even at. I mean, the SPY is at an all-time high as well. So we're seeing that even just the general stock market is at all-time highs, and these are the indexes, the mutual funds that you can invest in, ETFs and such. And so we see that those are at all-time highs. So let's go ahead and jump over to some other assets that have been just on a tear. So we have gold here. All right, so gold itself, let's see the futures COMEX. Gold itself has closed above $2,400. It has not closed above that yet. I mean, we recently touched it here. We touched it intraday, but we did not close above it. It actually closed somewhere around 2,300, high 2,300s, but now we closed above 1,400. We obviously had this little sell-off here, and then now it's back on the run. And gold itself has so many things going for it. I mean, I've talked about this multiple times with central banks buying gold hand over fist. I've talked about even in China, where the average citizens are buying a lot of gold. It has not happened significantly in America. I mean, we do see the articles of like Costco, people buying gold bars out of Costco and such, but over in China, they are cleaning out the exchange, the Shanghai exchange. They have higher premium than the COMEX and everything. So we're seeing that over in that region that people are buying a lot of gold. And a lot of this has to do with the uncertainty of government debt and deficits. We know that the government debt is not decreasing anytime soon. We know that the deficits continue to increase. And while interest rates are high, the government is having to pay a lot of interest on the money that they are borrowing to fund their liabilities. So we see that gold just has a lot of things going for it, and I can see it even going higher. So let's go ahead and look at silver. All right, silver futures. Silver closed above $31 at 31.77 an ounce, and as you can see, I mean, it popped, this morning, and it just continued to tear throughout the day. And when you look at the silver price over the last 6 months, um, you had a run up to the 27, close to $28 an ounce, a cool off back down to 26, and then now it's above 30. And we haven't seen above 30 in a while. I mean, if you look at the 5-year chart, the last time we even saw close to $30 was, I mean, we're looking at it right here in 2021. We saw silver rise to what, 28.36. Yeah, 28.36 looks like the high, at least of where it closed. And so for it to close above $30 an ounce, that is very bullish, very bullish. So it's broken out for sure. So we're seeing silver, following gold. I mean, silver is always like gold on steroids. Gold moves first, silver goes second, and silver can increase in a significant amount of percentage more than gold, because silver is a lot cheaper. And you all know that I've been buying physical silver. I have not been buying the stocks, but we can actually look at some of the stocks here, which I think the stocks are still fairly cheap, but we do see some movement into the majors. So like Pan American Silver, this was one company that I actually owned because they paid a dividend. And I did sell out of them a while ago, which I talked about that on my recent episode with Rick. And I mean, Pan American Silver was at $12, and the lowest for the year was $12.20. Well, that's year to date. Yeah, that's probably the lowest for the year, $12.20. And I was not buying down there. Like, I was buying in this range here, between 17, 18, 16. And then it went down the way down to $12 back in March. And I didn't buy, but as you can see, it just went on a rip. So, I mean, you're almost up $10 a share if you were buying at the $12 mark. Same thing for other stocks such as First Majestic Silver. We see that they are at $7.94. They closed at $8.04. If we look at the year, I mean, First Majestic was at $4. So you almost doubled your money if you were buying First Majestic at $4. Obviously, people don't necessarily time markets well. So, I mean, some people may have averaged a little bit here, not necessarily just bought and accumulated. But as you can see, I mean, we're back to $8. Now, when we're looking at the last 5 years, these equities are still very cheap. So First Majestic is at $8, which I actually started averaging back into First Majestic, because when I look at this chart here, it's kind of weird just being on let me go to the candlestick. All right. So when I look at this chart here, First Majestic, I mean, the high in the recent years, right? So 3 years ago, the high, it was at 24.01, and right now it's at $8. So it could still double, triple from here. So if it's at $8, 8 times 3, 24. I mean, it could still triple from here, and not to say we're going to get this huge run up, this candle here, but as you can see, I mean, even here it was touching about $20. So even you can still even just double your money, right? With First Majestic, because it's still fairly cheap, compared to where it was. And silver, the price of silver is a lot higher. So people are buying more of these equities, that we are seeing the price rise significantly. So it's pretty interesting to watch. Now let's go ahead and look at some. I want to look at some Go royalties. So obviously royalties here. Franco Nevada is back to 128. I was buying Franco Nevada back down here at 104. So I mean it's risen over 20 bucks a share. Obviously, with how expensive Franco Nevada is, um, it's a little bit harder to accumulate a lot of shares to really profit significantly. If we look at stocks such as Newmont Mining, I was buying Newmont. I was out of Newmont for a while, and I started buying Newmont when I saw them sell off here. So they were at $33. It's like, hey, Newmont looks fairly cheap right now, even though it's been cheap for a while. But just looking at Newmont, it was at $33. They had this huge sell off here to where Newmont went below 30 bucks, which I haven't seen Newmont below 30 bucks before since I've known about the company. So I started averaging in here. You started to see the rise back up. I kept averaging in. And then now we're sitting at $43. We had a huge gap up here. I remember this day I was looking at my account. I mean, it went from $36. That was the low, and then it just gapped up to $43. And so now we're still here. And then when you look in the grand scheme of Newmont in general, we're still low. We're still not at the highs. So after Russia, Ukraine, you begin to see, I mean, before Russia, Ukraine, Newmont was trading at $70 to $75 a share. And then after Russia, Ukraine, it spiked up to $86 a share. So it's significantly off the highs, right? I mean, even the COVID lows right here, COVID lows was $33 during the COVID lows. So, I mean, it hasn't been these prices since 2019, right? So, as you can see, we're still about almost 100% off of the 50% off of the high. So they can still double from here. So these stocks are still looking fairly cheap, even compared to what's going on. Todd, good to see you. Good to see you. Y'all, this is my guy right here, Ty Sweet. Be sure to check him out. He's very multi-talented. We got to catch up soon. Yeah, so as you can see, Newmont is still significantly cheaper. It could go significantly higher, especially with gold breaking out. And we saw silver, the chart of silver as well. Now, let's go ahead and jump over to some of these these meme plays. A friend of mine, I've been hearing about this one. It was in Wall Street Bets. This one, actually, I think this is the wrong one. I think it's FFIE. Yeah, so a friend of mine was buying this at 50 cents. And we were just talking earlier today, and the stock just skyrocketed. So in the last 6 months, this stock was trading down to 4 cents. And then you just had a huge squeeze come in, and it went up to nearly $4. And a friend of mine told me he bought in at 50 cents. And I hope he sold. I have to connect with him to make sure he sold, but it's ended up selling off at $1. So you're seeing these squeezes, these short squeezes in some of these meme stocks. So this company has issued a lot of shares. So like when you look at the price here, I mean, the price says it was at what, $5,000. The share price was not at $5,000. The issue is that they diluted shareholders. They kept diluting shareholders, which means they issue more shares, and the price of the shares continues to decrease. And then, as you can see, it just continues to go down. And it went down to 5 cents, and now it's at $1. So don't think that these higher prices here was the actual price that it was trading at. That's not how it works. Other stocks such as AMC, we saw a short squeeze in AMC. AMC is back down to $4, but as you can see, this big, well, that's not even the same spike. This candle here, it just spiked up significantly. It went up to close to $12. It says it was at 11.88, and then it sold off and went back down to like $6, and then it cooled off again. So I know some friends that made some money off AMC as well as GameStop. I did play a little bit of speculation in AMC. I mean, especially today since it's cooled off. What we've been seeing here outside of the well, the short squeeze was mostly people have been talking about AMC and GameStop for a while. So I'm not gonna act like, oh, it's just because Roaring Kitty showed back up online. Roaring Kitty is a trader who has been a part of the Wall Street Bets crowd for a while, and he showed up online. He disappeared offline and showed up online, and then that pretty much signaled people to begin to jump into these stocks. People have been shorting these stocks. Hedge funds have been shorting these stocks for a long time, betting on the price to go down. So then when you have all of these retail investors come in and they buy the stocks and they're pushing the price up, it is causing the hedge funds to lose a lot of money because they're betting on it to go down. The stock is going up. And what that does is cause the hedge funds to lose money. So as you can see, it cooled off. I did buy a call option on AMC for July since the prices were a lot more depressed than over here. But we'll see what happens. I mean, it's money that I can afford to lose, but I don't necessarily know if I don't think that this short squeeze is over. I think that the traders are taking a break because the CEOs of these companies did get smart and they started issuing shares in the middle of the short squeeze. So AMC is like, hey, we need cash. We're going to issue more shares at $7 a share. The price of AMC, I mean, just months ago was at $2.46, right? So they're like, hey, I can issue more shares at $7 or even more, and people are going to buy them, and then we can raise 250 million. We can raise however much money that is, right? So that's what's been happening. Is the CEOs have been coming out because these companies are pretty much broke. Like they don't have the best financials and such. So when you see these squeezes coming in, these CEOs are coming in and they're saying like, hey, let's go ahead and issue some shares, raise some money while everyone's piled into these trades. So that's what's been happening, and we've seen the sell off, and I think that there's still possibility for there to be another spike. I don't know how high it will spike to, but I think that if it spikes again, I will be positioned, and I feel like I'll be positioned early enough to where I could benefit significantly. Same thing happened with GameStop. I mean, GameStop, a friend of mine, he posted his investment in GameStop, and he pretty much made a few $1,000s. I mean, he bought in at $18 or something. He bought a call option, and then you just had this huge rise up close to $70. I mean, 64.83. And then you had a huge sell off. And then GameStop even came out and said that they were going to issue more shares to raise some capital too. So it may not be over. I think that these traders, these short squeezers, have been silent for a little bit, and I think that there's still room for them to profit. So with that being said, let's go ahead and jump over to just the Chinese stock sector before we jump into this article that I want to read with you all, because I think that this would be very, very, I think that this is important. So I've been personally buying the MCHI, which is the China ETF, iShares ETF. And this is because I've been buying this because China has been depressed for a while. I mean, I think the last time, if we look at the chart, China's been selling off since 2021, February of 2021. China's been on the sell off. They went through a huge, almost like recession. There was concerns about recession in China, and that's been happening over the last 3 years, right? So at some point, they're going to have to recover, right? They're going to have to recover from that big downturn. So we can see like the MCHI, this ETF, was trading at the high was $97. And then it got as low as $35, maybe even a little lower than that. I started accumulating around $38. And also Lynn Alden put a plug out there saying that she was looking at the Chinese sector too. and that she was going to um, look at investing there, but she wasn't going to invest a lot of capital. So, and then you just begin to see the price just significantly rise. So now it's at $47.44. So I'm up pretty decent on my trade, but then I'm also looking at, okay, the previous all-time high was at $97, so I'm still far off. Like this could double from here. So I've been accumulating shares, I've been holding them, and this one actually pays a dividend, a 3.3% dividend. Obviously that isn't much, but it pays you to hold it. And so this is helpful, especially just thinking about the risk that you take when investing in China. So that's one piece that's one thing I've been working on. So also JD, for example, I'm upset at myself. I didn't hold JD long enough. You all like this. I keep going through these phases with some of these stocks where I sell off and then sell them, and then I don't hold them long enough to see them rise. So JD was at $41. I mean, this is just a yearly chart. About a little over a year, a little less than a year ago, it sold all the way off to about $21, almost $20. I think it even touched $20. I was buying down there. The issue is I didn't hold. I didn't have any conviction on China. I knew that China was cheap. I just didn't know where it was going to go. I just didn't know. Sure enough, JD's up $14 from the bottom where I was buying. So I would have been up $14 a share, and that would have been a nice profit. Nice profit. But JD is still cheap compared to when you're looking at over the last 5 years. JD traded as high as $108. So even though I could have been at my average could have been at $21, JD's high is at 108. And so, it's not over. Same thing for other stocks like Alibaba. Alibaba's at $88. I think the low for Alibaba was about 68. I think that was here about $66. So as you can see, these stocks are starting to recover. Alibaba is still far off its highs. I mean, its high was $319. So this could still triple, quadruple from here. So those are the Chinese equities. I think that China's in a better place now than they were, and obviously, economies go through hard times. They go through recessions. They go through times where they have to cleanse and they have to be restrictive on policies and such. And so, but it's looking like okay, we could be on the rise again. So that's important to look at. All right, so we're going to go ahead and jump over to this article from the Wall Street Journal. This is from, I believe, today. Investors are striking gold all over. May 17th, so technically yesterday is 12 o'clock here. Investors are striking gold in almost every market. The Dow Jones Industrial Average crossed the 40,000 mark for the first time Thursday amid an almost picture-perfect investing environment featuring resilient corporate profits, low unemployment, and easing inflation. Most everything is going up. Established Dow stocks, faster growing tech sector shares, Bitcoin, other cryptocurrencies, and even gold and other precious metals. Risk averse investors have a bounty of options too, including certificates of deposit offering yields of about 5% and rising junk bonds and other fixed income investments adding to the glow. Growth stocks are inexpensive, but the rest of the market isn't, says Ben Inker, co-head of asset allocation at Boston-based investment firm GMO. He says that the overall investment environment with its many reasonable choices has rarely been this attractive in 24 years. So we're seeing that multiple sectors are performing well right now. And so let's go ahead and jump into it even more. Although many Americans have a negative view of the overall economy, partly due to persistent high prices, they are more upbeat when it comes to stocks. So these are the changes in asset values. As you can see, copper is up 31%. Copper's up 31%. Tech stocks as a whole is up 20%. Gold 20%. You have the Russell 2000 18%. S&P 500 17%. Utility stocks are up 16%. The Dow Jones is up 14%. Crude oil 8%. High yield corporate bonds 3%. 3%. The Treasury 7 to 10 year 1%. And then let's see. Zakima Peterson, a 35-year-old makeup artist in Brooklyn, says she hopes to add to her holdings, partly because stores are jam-packed when she walks into Bergdorf Goodman and Sephora to stock up on products and clients. People are going to complain about everything, but they are still buying, says Patterson, who started investing in March 2020 when she was at home with no clients during the pandemic. The Dow's rise to 40,000 and the surge in other market indexes came in two stages. Last year, markets rallied on expectations of falling rate of inflation that would allow Federal Reserves to cut interest rates. More recently, there has been relief about robust earnings and excitement about advances in artificial intelligence, quickly analyzing enormous data sets that could produce a range of innovations and improvements, from coordinating construction crews to bringing efficiencies to manufacturing and educating young people on developing new drugs. Optimists say that was a very mouthful of just huge amounts of jargon. All right. So sorry about that. I'm going to try to filter through it. So it says I lost. Okay. So I think my screen went out or something, but I'm still reading the article. Hopefully y'all can still hear me. A new class of obesity drugs, blah, blah, blah. All right. Well, we didn't really need to touch that. We have fundamentally changed the economy. Chairman of IBM. Companies are investing more in the United States than they have in a long period. Even former skeptics are warming to stocks. Let's see. Everybody's coming into the year feeling too good. Says the market is in a better position than in the 1990s, a time when unemployment was low and excitement about the internet drove a tech frenzy. So we can see the unemployment rate spike. This is the COVID spike, and it's come down since then. So the global financial crisis here. You had the tech bust here. Unemployment spiked. You can see the unemployment spikes in coordination with any recession. The 80s recession, this is when Paul Volcker and them hiked interest rates super high. You had multiple recessions in the 70s. You had the early 90s recession, right? So unemployment would spike high during those times. And So one potential worry, the U.S. government is expected to pay an additional $1.1 trillion in interest over the coming decade, according to the Congressional Budget Office. Spending has been far too excessive, driving a 10-year Treasury yields higher and potentially hampering the economy. Sooner or later, yields will have an impact. More investors are bullish, which presents somewhat ironic concern. Obviously, when people are too optimistic, you have to wonder if we're going to have a economic disaster when people get too optimistic. And I mean, we see that the Dow and the S&P is at all-time highs, right? So be careful. I would say be careful. Definitely. When people are just this bullish, it can be dangerous. And it is also true that investors tend to do a poor job of timing markets and sometimes get enthused just before a pullback. So, you can have a significant pullback and you don't want to get caught holding the bag. The investor's intelligence demonstrates the widespread optimism, with 56.5% saying they're bullish and just 17% saying they are bearish. So I think that, this is an opportunity for you to be able to generate a lot of wealth. I believe that holds true, but I also think that you have to look at other areas. So I did mention the Chinese sector. So China already went through a depression with their stocks, right? Um, their stock market, and they seem to be coming out on the better end of this economic downturn that they've experienced. So that's different than the U.S. market. U.S. is hitting all-time highs, and so you just want to be very careful. I mean, you got the meme stocks coming back out. You got all these things that you just should probably be aware of. Um, so that's that. I hope that just covering these markets and everything was just helpful for you all. I have to get going. I have to get some rest and everything, but I appreciate you all who have tuned in today and hope that this was provided some value to you just to talk through these markets and how you can position yourself to earn some money, and also be cautious that when everyone is bullish, you may need to be thinking in a different way, like the opposite. So be careful. I would have some hedges in place. Protect your wealth. Have some dry powder. If we do see a significant downturn, you got to have capital to be a capitalist. And yeah, so those are important. All right. Well, you all take care. Thanks, Ty. Appreciate you. We got to catch up soon. I'm going to hit you up. We got a lot to catch up on. So I'm going to hit you up. All right, you all. Y'all take care, and God